Thank you for joining us today for this webinar, OTT Video versus the Pandemic. My name is Quentin Stallivieri. I'm a market analyst at Dataxis, and I'm with Chris Moore, Sales Director of Brightcove. Hi, Chris.
Hi.
For all of you data-hungry people, we're going to delve into the numbers of the video markets, linear, on-demand, on TV, on other screens, content of all kinds, and how the pandemic affected all these markets. Please do ask your question in the chat. We'll answer them at the end of the webinar. Concerning the agenda, we're going to start with market data on the TV and SVOD sides of this huge market before seeing Brightcove's own usage data spanning the fields of news, sports, and entertainment. But our first stop on this journey through video will be on the TV broadcasting market. On the next slide, we'll see numbers for TV advertising, most precisely speaking. This TV advertising market has already been in a rather fragile position for a few years, as shown on this graph, with little growth between 2017 and 2019, and even decreases in the Americas. On top of that come then the pandemic and the slump in global ad revenues it caused. Although TV is the least affected of traditional media because of spiking viewership numbers, which we will discuss with Chris further into this webinar, the lack of advertising budget for brands means that ad prices have to sink, which in turn heavily cuts advertising revenues for the broadcasters. We expect a decline of around 10% globally in 2020, with, of course, very diverse situations on a continental level. In developing markets, traditional TV is still by far the medium with the widest reach, which gives it an edge over other media. But in the more connected regions, internet campaigns offer both reach and tracking capabilities, which are a serious advantage when budgets shrink and ROI is even more important than usual. This situation can make a case for internet distribution, but we'll come back to it later in this webinar. Here we showed advertising revenues, and you could wonder maybe premium broadcasters, which are less reliant on advertising, are faring better. Well, premium content has without any doubt gained more appeal with people locked at home. But sports, which is the most premium content, has been stopped for some months, which led to a wave of subscriber churn and to cost expensive measures to minimize this churn. So it's difficult to say that one category coped really better than another. HBO, for example, enjoyed growth in subscriptions in Q2 and Q3, but not in revenues, while Sky subscribers and revenues both decreased, which is logical because of the importance of sports in Sky's offer. Let's see now how the main actors in the TV business are doing, namely the pay TV operators. During the pandemic, the global growth of pay TV subscribers was put to a halt. In Asia, for instance, a region which showed growth since years, this evolution stopped in the first half of 2020. In the Americas, the decrease that was already visible accelerated in the first half of the year. The same trends are noticeable in Oceania, which doesn't appear here because of its lower numbers. The only exceptions are the EMEA region, where growth was still weaker compared to 2019. And secondly, Europe, where a few big markets such as Russia, France, and Germany are pulling the numbers up with very contrasting situations around them. Now, discrepancies between countries or regions are explained by a number of factors, notably the timing and tightness of lockdowns, the difficulties of the economy, with some countries more affected than others, for instance, those relying on tourism for a big share of their GDP. On the right, we focus on the US with the first view of our data for the third quarter. As you see, the decrease in subscribers stopped in this quarter, which can seem surprising. The reason is actually a shift in the market with OTT pay TV offers, so-called skinny bundles, replacing traditional cable and DTH subscriptions. We expect this pause to be short and decreasing trend to start again in early 2021 at the latest. Because YouTube's TV, Sling, all their colleagues will not be enough to compensate for the losses of traditional pay TV operators. The numbers were also boosted by a good economic situation in the summer. So to summarize, the mature markets and the heavily affected regions showed a decline or a faster decline than before, whereas developing markets and less impacted areas still show growth, albeit much slower. This is only subscribers we're speaking about. Now let's have a look at the revenues. During our conference last month, Next TV Europe, we heard the following sentence: the readiness to pay doesn't follow the readiness to watch, meaning the increase in viewership doesn't automatically translate into an increase in revenues. This is especially true for pay TV, as we can see here. Among the factors that drove ARPU down in the pandemic, the loss of sports played a prominent role, obviously, but the economic uncertainty, short-time work, all the contexts that increased precarity for households is even more important. In North America, you notice once again a counter trend with ARPUs growing. Responsible for these are mostly, once again, the skinny bundles, which I mentioned. They are low-cost offers, which were really pulling down the average ARPU. But as they develop fast, they get closer and closer to traditional pay TV offers, which mean their prices increase and in turn, the ARPU increase. On the next slide, we are talking about the winners of the pandemic, the SVOD services. It's true that the situation looks way better on this market. Established platforms reported record subscribers additions in the first quarters, whereas new launches were very successful. Of course, this growth may not be taken for granted. For instance, Netflix already reported a much smaller increase in subscribers in the third quarter. We've noticed, once again, various situations in different regions, because the fact is SVOD prices tend to be similar wherever a given platform is present, whereas the standards of living are not. That means Netflix costs the same price in France and in Bulgaria, for example, but comparatively, it's much more expensive in Bulgaria. On the other hand, to compensate for the loss in TV advertising revenues, broadcasters put an emphasis on their own web platforms, especially their SVOD platforms, whose revenue are not dependent or less dependent on advertising. We also see a lot of freemium models appearing since a few years, and with the collapse of the ad market, this trend is accelerating. Two examples could be Join in Germany, Peacock in the USA. Now, let me hand it over to you, Chris, for more data from Brightcove, with first some info about the video index you publish.
Thank you very much. Yep, my name is Chris Moore. I'm from Brightcove, based out of our London office, servicing the EMEA region, sales director. Working with tier one media and enterprise across the region, as well as traditional broadcast and a whole raft of different streaming customers. The data I'm using today is anonymized data, and it's from Brightcove's, I guess, aggregated customers. So it examines more than 400 billion data points, and it's from thousands of Brightcove customers around the world every quarter. And we use that, we sort of leverage that user data to drive actionable business insights, and we publish that in our quarterly video index. So it's not a random survey of customers or a poll as such, but it's actually based on user data on our servers. And whereas, sort of polls are more of an opinion of what's going on, this is a true sort of insight into, usership across the Brightcove network, which is by all accounts the largest in the world. So who's Brightcove and what do we do? I would characterize us as the world's largest enterprise video platform, or OVP. We're a public company based in Boston in the US, been around for about 15 years, public for coming on 10. This year we'll probably see 600 million plus viewers a week watching 800 plus million videos on our platform. Probably around 200 million in revenue this year, 185 last year, or more as results will show next January when they come out. And one of the staggering things about this, the size and the breadth of Brightcove and how much coverage we have internationally is that we account for about 2% of the total downstream internet in terms of our video delivery, which is a pretty staggering number. And that's, I guess, feeds into the validity or how useful the data is that we'll be discussing today, and the relevance of the Brightcove Video Index that we release quarterly. A little bit of an industry overview and some discussion points about what's been happening during the pandemic. So broadcasters are evolving to stem their eroding audience. So for instance, sort of, OTT is struggling, OTT is exploding, whereas broadcast is a little bit harder hit, which is continuing the trends that we've seen. They're beginning to evolve though. So for instance, platforms like Disney Plus added 28 million subscribers in Q2. Netflix added 28 million subs in Q2 and 3, bringing it close to 200 million. And studios are, for instance, considering premium VOD offerings or PVOD in an effort to bring cash in with theaters closed. On the broadcast side, companies like NBC Universal saw a reported $100 million in revenue from things like the Trolls World Tour. Disney Plus was able to release Hamilton and Mulan, and MGM is reportedly considering releasing the latest Bond movie online. What's been happening to mirror Quentin's statements in the pay TV world is that things are declining a little bit, and you can see here from some of the numbers that net losses so far from Q1 to Q4 have been significant, although Q3 saw a bit of a reduction. But in general, pay TV services are seeing more of a migration to online and OTT platforms. One interesting thing is what's going to happen with regards to 5G and how that's going to affect the market. Obviously more bandwidth and faster speeds with lower latency are going to be good for streaming services. And also entering the market now, something that's coming up a little bit is things like VR and augmented reality, and seeing some of those things be bandied around. But I guess the industry opinion is that these could sort of go the way of 3D, which was the way of the dodo, I guess, after a while, when it becomes less of a cliquey, sort of a niche entry product. So I guess the main topic for discussion today is streaming during the pandemic, and what are the effects that we've seen of the situation globally. In general, you won't be surprised to hear that video views are up 46% across the board. And amount of time watched is up by 42% in July, 50% in August, and 49% in September. Viewers are engaged, and they're not just grazing content. And the reason for that is there's more content and there's better content around. So in terms of device share, smartphones overall are seeing the bulk of viewership and are up around 50% of all views. And we see a little bit of share being taken back by desktop, but mobile and connected TV are resuming growth. So desktop's up 33%, connected TV's up 168, and smartphones, even as they slipped a little bit in share, we're seeing 57% growth with tablets. In terms of consumption, mobile versus desktop, we see share on mobile devices has seen 54% growth at a time when sort of we've been at home and had access to connected TVs. We've likely spent far more than 8 hours a day parked in front of our laptop. And we still go back to mobile devices to catch up. And I think we're going to see in this report an awful lot of numbers when it comes to connected TVs, which are really continuing to ramp. And I guess from a vendor perspective, we're seeing a lot of interest on device reach and how we can assist our customers in getting onto more and more platforms from an OTT perspective quickly and easily. Gains by connected TV are always going to appear disproportionately large. And it's, I guess, because of it, sort of a law of small numbers type thing. So as people are adopting, it's skewing the data a lot more quickly as there are a much smaller percentage of viewership. I just wanted to move on a little bit to news. Obviously, news is something that's been it's seen huge ramp, 44% increase during the pandemic. And specifically, we're looking at three markets for this. North America and Europe represent about 80%, and Latin America about 20%. So from a streaming perspective, news video is up 44% across the board for the last 6 months, which, as I mentioned, is not surprising. I mean, it's a time where we're all interacting with news nonstop. And the amount of news that matters to viewers continues to kind of soar as we face obviously global difficulties over this time. In Q3, time watched kept pace with the gain in views on average. So July saw the smallest gain, August the biggest, but the quarter overall was very good for companies that provide news, basically. And if we move on to sort of device consumption on a news basis and how we watch news, and specifically on what devices, you can see here that not a lot changed. So there wasn't a lot of change on the consumption habits of people that are consuming news. It seems like news patterns are sort of kind of set. So nothing that's been happening has sort of impacted the way in which we consume the news. Is there any questions at this point, Quentin?
Well, if the audience has any question, please do write them in the Q&A box or in the chat. For my part, I do have a few questions for you, Chris.
Okay.
Speaking about OTT, I wanted to know if the pandemic has seen any particular market segment change their approach to reaching their audience.
I would say for a lot of the more developed industries, the pandemic has seen a doubling down of existing strategies. So anyone who's sort of already accustomed to going to market with OTT products has seen uptake and doubling down on that strategy. But it certainly has on the Brightcove side, we have seen a lot more interest in sort of tier 2 or non-traditional OTT players who are having to, I guess, embrace the change in how they interact with their audiences. And a couple of examples of that would be companies that would usually distribute through cinema, perhaps not the large film houses of the world, but the smaller organizations who work on things like indie films or smaller releases, and they've had to sort of formulate a strategy to be able to meet the needs of people who still want to consume this content, but I guess essentially can't by attending cinemas. So film festivals as well are looking at OTT platforms, whereas before it might be a simple, restreaming or long tail content associated with those engagements. We're seeing the need for pure, more robust OTT type products being deployed in these instances to be able to support, streaming to a range of devices and enable people to watch films in more comfortable format than perhaps on limited sort of limited deployments on things just like pure web.
Mm-hmm. You're talking about indie films, about film festival. Those are really challengers. Are OTT accessible to that kind of actors too?
Well, traditionally not, but I guess over the past sort of few years, you've seen vendors such as Brightcove and other vendors in the market coming to market with products that allow a lower cost of entry on a bunch of different devices for companies that may not have multi-million-dollar budgets but are looking for a more OTT centric platform. And they're typically a vendor would be competing with an in-house build or something like that, which can be cost prohibitive for customers who need to do something that A, they're not used to, and B, needs to be done quickly. So you see vendors like Brightcove will be coming to market with platforms that allow them to use perhaps templated type applications, applications that work across many different device types, but able to be, I guess, updated once and pushed out across all of those device types. So it's more of a reference type application. Excuse me.
Mm-hmm. Okay, and another question. We've mentioned a lot of time in this webinar that streaming rates have increased all across the board. But do you know if this has translated into more revenue for ad-funded platforms like AVOD?
It's been challenging for, I guess, pure play AVOD providers, even those with a blended strategy as well. A lot of the industries that they rely on to, I guess, fund the advertising have been hit really hard. Bricks and mortar, retail, hospitality, and travel sectors have all seen, massive reductions in their advertising spend. So it hasn't necessarily translated into more revenue for everybody, as I think you touched on in your slides as well. So there's definitely going to be an impetus or a focus on, defining ad strategy and ensuring that inventory and fill rates are high, and that they're working with ad units that are delivering the most value to the publisher or to the OTT platform, and that could be done through ensuring that they're using have got a solid workflow in terms of getting advertiser revenue into their platforms through perhaps supply side platforms. Excuse me.
Okay. I see we have a question from the audience, from Mark Andrews, who's asking, you mentioned 5G is here. My experience, it is very limited currently and it's still very early in adoption. So for AR and what 5G enables over 4G is not really here. What else would you expect with 5G to enable? What would you expect to enable with 5G?
So, I mean, those are emerging technologies. I would agree with you. I think, things like AR and etc. are kind of in the same place as 8K video right now. So not a lot of content, not a lot of applications. I think, and you are correct, coverage and 5G coverage in a lot of markets is still in its infancy. And I think it's sort of mentioned today and more something to watch for the future.
Strongly agree with that. Okay. Let's wait another 10 seconds to see if we have another question. Otherwise, I'm going to thank you all, dear audience, for your attention and wish you a very nice day. Stay safe.
Thank you. Thanks, Quentin.
Thank you, Chris, and bye-bye.